What is going on, Alpha Hunters? Hope everybody's having a fantastic Friday. It is a fantastic Friday. Not like yesterday when I screwed that up. I was thinking yesterday was Friday. That was awkward. It's like looking a stranger in the eyes from 5 feet away on accident. It's just weird. All right. Nice gap up on the market today. Not much going on, but we did get some data, so we're gonna have to go through that. Yeah. So let's just get going. SPY, nice gap up here. 1/4% gap up, not bad. Not bad. Kind of just choppy throughout the day. Yeah. Will we roll over and do what we did on Wednesday today? Question mark. Doubtful. I don't think that would happen. Uh, but it is kind of interesting though. We've already taken out that entire, like 1.4% move down, 1.25% move down that we had, that collapse that we had at the end of the day there on Friday or Wednesday. So already back up to where we were on Wednesday. So there you go. Nothing to worry about. Nothing to worry about. SPY doing all right. Qs back above all time highs. Back above the all time highs of 2002, 2001, the end of 2001. Yeah, doing all right. They had a nice little gap up today, up to 30% right now. IWM up 1.2%. Ooh, buddy. Look at this move on the IWM, man. Just crush. Up over 0.5% on the gap up. Yep, looking pretty good there on the IWM. DIA, nice move here. A little bit of a gap down, but traded higher. Okay, looks like it's coming back down. A little bit positive, not much. Kind of neutral. Not really doing a whole lot there on the DIA. RSP, a little bit of a gap up there, and then kind of just choppy there. All right, choppy. Up 0.5%. It looks pretty good. I kind of like this little pullback to the moving averages. Probably just going to continue to push higher as we go into next week. DIA, kind of the same thing, just sideways consolidation here. Waiting for the moving averages to kind of catch up, push it higher. IWM not really waiting as much, just continuing to push higher, making a high over Wednesday's high today. So yeah, that's all that we had Wednesday. It's nothing to worry about, man. Told you, man. We're gonna have we would have a quick drop and then it'd be a quick bounce. Just didn't think it was gonna happen. Literally 5 minutes after I said that. Qs. Yeah, Qs back up to the weekly high. Not too much going on there. SPY, nice little sideways consolidation here over the past week and a half. Kind of waiting for the 10 EMA over the previous 2 days. Kind of help push it and support it up. All right. Okay. So we got some data this morning. Let's check out this data. Core PCE price index came in at 0.1%. Forecast was calling for 0.2%. Prior month was at 0.1%. So basically, I'd say it's pretty steady, pretty stable. Not much kind of going on there. Durable goods orders came in at 5.4%. The forecast is calling for 2.2%. Pretty good bounce, especially compared to the prior month, which came in at a negative 5.1%. Personal income was flat to forecast. Not too much going on there. Personal spending. So this is the one we were kind of more talking about yesterday, right? Personal spending came in at 0.2%. Forecast was calling for 0.3%. Now, this is kind of one thing we were mentioning yesterday, right? That we kind of thought that would be it would come down, right? It would come down. Why is? Oh yeah, that's right. Prior month, hold on. Prior month was 0.1%. Yeah, prior month was 0.1%. Get grief, get rid of that. So, still kind of trending down. Be curious to see how this comes in for December. So, but the fact that it is down from the expected of 0.3, not a shock, but obviously, the market I didn't think the market would be bearish for really any reason, just because it's a narrative thing. They want the market for the most part, especially the bulls. They're looking for any reason for the yields to come down, for Fed's funds to come down, and if data starts to come in weaker, well, then that kind of says that yields will and Fed funds will most likely be dropping sometime. I would say in the first half of next year, maybe. That would be my guess. Man, look at that monthly chart. Jeez, on the SPY. So if you're looking for the Fed to drop rates, then you're looking for the data points to support that. And oh man, maybe we are going to drop off. So if you're looking for the data points to support that, you're looking for weak economic data. That's why we got a little bit of weaker economic data compared to the forecast. But like saying you want weak economic data so that yields come down and equities go up is, I mean, it's a double-edged sword, right? Because it's like, well, if you're going into a recession, do you really want weak economic data? I would rather have a strong economy. Like, I would rather have a stronger economy. Like I don't care that yields or rates are higher. Like, I would just rather have a strong economy, because that means people have jobs, and that kind of stuff. Like, people aren't getting forced out of their homes because they're defaulting on their mortgage or whatever it is, or getting kicked out of apartments, can't pay for food. I don't care what it is, but I don't know, man. I just don't get that bull thesis of, yeah, I want weak economic data so that we can lower yields and equities become even cheaper, and equity prices go up. So I don't know. I don't buy into that one. Anyways, but that's just kind of the narrative that's kind of going on today, or that you were going to expect if we did get a little bit weaker economic data. Anyways, let's check the market, some of the fallout from that data. So VIX down a little bit, makes sense. We did have a little bit of a gap up. All right, so you can see the dollar actually dropped off here. Very important level it's kind of getting into. And you can see it kind of bounce in that area. We got a little bounce there today. What does it look like intraday? Yeah, I mean, you can see we had a little bit of volatility around that time. We got the data, we had the drop off. That's kind of what we're talking about, right? Where people are like, oh yeah, look at that, we're having weak economic activity, dollar drops, but you're getting to a spot where we've been moving pretty good here for the past month and a half, almost 2 months now, and you're getting to a pretty strong support level. At least it's gonna have some kind of bounce here. Is it gonna be like the bounce that we had at the beginning of December? And then maybe we roll over here in like the beginning of January, maybe, possibly, but you're going to have at least a little bit of a bounce down here. So just be prepared for that. Gold's up actually kind of strong today, up half a percent. We did talk about that a little bit yesterday, right? We had this wickedly nice looking cup and handle. Look at that cup, handle. There's the breakout. Snag the retest, and that might be the retest right here, right? So yeah, it looks really good. Really good. I was really hoping back in October we were going to go a little bit lower, but man, that the Middle East issues, that kind of put a damper on that. We just kind of ripped it, kind of changed the trajectory of what I was looking for, but it's all good. 10-year yield, not as bearish. They didn't drop off super hard when we got that data this morning. They had a little bit of a bearish reaction, a little bit, but they had already bottomed. They already started bottoming, and they've been pushing up ever since, really. Not super bullish, though. It wasn't like a super strong bullish pop there on yields. So, yeah, it's just, I mean, just expect we're probably gonna get a pop here on yields. Probably even going into the early parts of 2024. I mean, they've just been hit so hard. We had a little bit of a consolidation end of last week, beginning part of this week, and a little bit of a breakdown there on Wednesday. And then starting to kind of bounce up. Like we haven't been really moving down here as much. over the past week, I guess is my main point. So might have a little bit more of a rally here on yields. 10-year yields starting to move higher, so that means the 2-year. I mean, 10 years not up that much. That means 2 years probably dropping off. Let's take a look. Yeah, dropping off a little bit. Where are you getting 2-year? 2 years having a really hard time getting through this level. It's kind of where it bounced last week. I do remember that. So, yeah, I'd be curious to see what yields look like next week. I'm not going to be on the mic next week, but I'll keep an eye on some things. I will get out a market outlook video at the end of the week, as normal, but don't want to worry about live streaming and stuff. LQD or hold on, HYG. A little bit of a gap up here, kind of false breaking out because it's kind of coming back down. Be curious to see how this thing closes today here on the HYG. Because, I mean, we had a little bit of a close. I mean, it's kind of a zone, but, I mean, I just have a line here. So, yesterday was definitely the highest close we've had there in a while. Oh, at least all year. I mean, this is going all the way back to August of last year, right? So, yeah, I'd be curious to see how we close here. Because this could be a false breakout if we come back down anytime soon. Through that level. Next week, gonna have to really pay attention to that one. Because the other thing is, yeah, the LQD and I believe the TLT have not been performing as well this week. TLT had a little bit of a false breakout over the previous 2 days. Came back down, definitely dropping again today. But yeah, the LQD not really doing a whole lot. I mean, you just see how just sideways it is here over this week. Now, I had mentioned that that's kind of what you want to see. You know, do you want to see this consolidation, sideways? Did I not get it? Something like this. And then if you get that, then you're going to take that breakout, right? You're going to take that breakout. So maybe we just set up, this kind of consolidation here. I don't know how long it would last, but I would say like another week. If we don't break out, I think that would be a long enough kind of consolidation that whenever we do break out above that 111 area there on the LQD, you would want to take that bullish. So, yeah, we'll see what happens. I wouldn't want to be doing any trading next week. I'd rather see how things set up. Mostly because usually that week in between the Christmas holiday weekend and New Year's holiday weekend, or holidays. They don't always have to be on a weekend, but it's really thin. A lot of people not really paying attention as much. It's really easy for the market to kind of move around a little bit because of how thin it is, but the market also typically doesn't do anything drastic. It kind of just does the normal same old stuff, like whatever it's supposed to be doing, which is usually just slowly trending higher. Every now and then you'll get some years where we do drop, but it's not often. I got a headline here. Check this out. So the other day I put out a video basically talking about student loans and how it's kind of all going to come to a collision here in about February, March with the repo market. Repo market is expected to kind of run out of funds in that February, March, April kind of time frame. And student loans, probably are going to be, reported to credit agencies probably in January, February, if they're not paying back, right? And they're not applying for a delay, which is about 12 months. If they're not applying for that delay, and only 60% of people have actually paid their student loans, right? Well, check this out. 66% of borrowers say they have to cut back on retirement contributions to make student loan payments. This is all kind of coming at the same time, right? At that October, November, December kind of time frame where we're getting a lot of that data about people having to repay those student loans. And we've seen some data that has come out really over the past week or two about how much spending has been cut back from the consumer side, and a lot of it kind of coincides with student loan payments. Well, that's the consumer spending part of it, which I was very interested to see. The consumer spending data this morning was a little bit lower than forecast. But this part of retirement contributions, that goes directly into the stock market, right? I mean, that goes into equities and stuff like that. So, I mean, that's just another thing, another pillar of liquidity being taken out of the market. So if people, that are making these student loan payments are really cutting back, they're not even just cutting back on expenses, but they're also cutting back on investments. That's just another thing that really kind of hurts. I would say some of that bullish case right now, as you are going to get into that February, March timeframe, where a lot of things coming to head at once. I'm not saying the market's not going to navigate through it. I'm not going to say we're not going to have a pullback. I'm not going to say we're going to have another 10% rally from here, but not exactly wanting to be aggressively bullish either. The way, and if I just run this through my head, and I'm not very smart, but I do like to think about the way this kind of dominoes. When we get into earnings season, which when we come back from New Year's, I mean, we're going to be going right into earnings season. Let's see, when is United? Oh man, United Airlines, UAL. Jesus, I don't know why I forgot their ticker symbol. So yeah, we come back from New Year's, right? I mean, we're going to basically have 2 weeks, and we're going to be right into earnings season. So that's airlines, J.P. Morgan. Will be a week before. J.P. Morgan's usually one of the first companies that kind of reports now. Bank of America will also be that same day with J.P. Morgan. So yeah, when we come back, we're going to have about a week of trading. People will probably do what they normally do when they come back in the office. They'll look and see, like, oh, okay, yeah, we should be good. And then we're going to get into earnings. And then, we're going to find out, the banks, what they say, what they're thinking about the economy. And then we're going to get like this entire period from October, November, December. They're going to probably give us a really good insight as to what's going on with when's Visa. Visa is going to be towards the end of January, first day of February. Kind of their insights into what's going on with the consumer, that kind of stuff. AXP, kind of towards the end of January, not all the way into February. So, all that being said, we're going to find out real quick there in the middle of January if there is something to be worried about. So, that'll be a good time. So, the way I kind of think about the dominoes falling, and speaking of, Nike just had their earnings, right? Their earnings, and they're down 11.8%. I last saw them last night. Trading after hours, they were down like 10%. But yeah, you can see how crazy they've been today. Yeah, I mean, just absolutely horrible. Under Armour. So the way I kind of see this, let me get back to that. So the way I kind of see this going, as we maybe go into a slowdown, is the consumer stocks are going to get hit, right? We're already seeing that. We're seeing Nike get hit. We're seeing some of those shipping companies get hit. FedEx got hit this week. Like, a lot of these are tied directly to the consumer and consumer activity. So, how's Lululemon? I had a little bit of a gap down. Nothing crazy there. Lulu's been on a massive run. So the consumer side will probably get hit first. And possibly they are getting hit, right? They are getting hit. And once we start to have how's Target doing? Maybe once we start to have some layoffs, on the back of like a weak consumer or weak spending consumer, right? I mean, now that the consumer's kind of pulling back, not going to invest, they're not going to spend as much. We're going to start to see more layoffs. Like it's going to come. It's going to come around from a lot of small, medium-sized businesses, mom and pops, your local places, and some of that's going to kind of eventually trickle around and make some of these places think, hey, do we need certain things like certain technologies in the stores? I mean, you probably do need certain amounts of technology, but I kind of imagine a lot of places, especially if people companies are going bankrupt. Maybe you don't need a lot of that technology, and that's when if it spills over to big tech. Okay, that's the one. If it eventually spills over to big tech, that's where they would have the pullback, and that would probably, to me, that would be like late Q1, maybe Q2, if that was to happen. Right? Like consumer stocks are going to get hit first because the consumer can't pay for things, and they're not paying for things, then they're not. Target, Walmart. Walmart's up pretty good today. That's interesting. Walmart's up pretty good today. What other kind of staple stocks are out there? So that's interesting. Like Nike's the only one that's really getting hit. Estee Lauder. Don't really care that much about Estee Lauder. Ralph Lauren. What's this? VFC. VFC. I didn't even realize Ralph Lauren's still publicly traded. VFC. Is this the company that was Abercrombie? I remember. I'm not going to look into that, but RL, Ralph Lauren, down a little bit from that Nike news, most likely. But they've been on a huge run. So it's like, I don't know why a lot of these companies that are hugely tied to the consumer just went on massive, massive runs. I mean, look at this move on Ralph Lauren from basically when the market bottomed. We'll just take it from the low point to start November. I mean, Ralph Lauren went up 35%. That's up to the high of yesterday. Why is Ralph Lauren going up that much? No, I mean, I don't know. I'm not seeing data that says the consumer is going to be strong. That was just another piece, right? Another part that the consumer or people that got to pay back student loans are peeling back. There's so many millions of people that owe student loans. That's a lot of people. So continuing to sell down. All right. So yeah. Anyways, let's check sector rotation. I forgot about that. There we go. Sector. Oh wow, discretionaries. Look at that. Wow. How about them apples? Discretionaries getting hit. Consumer discretionaries at that. Well, consumer discretionaries is discretionaries. XLC also down. XLK. So discretionaries, communications, and tech. All three the biggest underperformers on the day so far. Financials outperforming. Real estate, healthcare, industrials, materials, utilities, energies, and staples are actually outperforming pretty good. Okay. I need ETF.com. Give me a sec. Let me get this website up. I'm kind of curious. Tesla's down 0.5%. That doesn't justify it. I mean, Nike's got to be in the XLY. I mean, that's the only thing that can justify that. So I'm gonna look that up. Always learn and look shit up if you don't understand something. Because I thought Nike was in the XLP, and that doesn't make sense. Why the XLY, XLP is... If Nike was in the XLP should be down here where the XLY is. So I'm gonna look that up real quick. Anyways, outperformers. We got Staples on the intraday. Intraday taking out the gap. Intraday, Staples, materials, industrials, utilities. Energies is in line with the market. It looks like healthcare kind of in line with the market as well. Real estate, financials, and then tech, discretionaries, communications all underperforming there. So the big dogs are getting hit today. Okay, so XLY. XLY. Go away. XLY. Oh yeah, it's up here. Always. Wait, what? Holdings. There we go. Nike. It is in the XLY. Okay. So it's in the XLY, but here it's in durables? Alright, that makes no sense. Whatever. Okay, fine. It is what it is. So is Home Depot, Lowe's, a lot of those getting hit today? Lowe's is a little bit. Home Depot's down. Amazon's down. Tesla's down. Yeah, we saw something. Okay. So, I mean, discretionaries across the board is kind of getting hit a little bit. A lot of that, I mean, if Nike's lumped in with them, it makes some sense. XLP, I just kind of want to eyeball real quick just what the holdings are here. PG, Procter & Gamble, Costco. Okay, I mean, yeah, that's a food company. All right, so that makes sense. PepsiCo, Coca-Cola, Philip Morris, Walmart, yep. Mondelez, alcohol consumption, basically. Altria, cigarettes, Target, Colgate, Palmolive. Yep. Okay. I believe all that. So actually, that makes sense on why. I would really wish then they would. They need to take Nike out of consumer durables here on the heat map. They need to put it in with like retail trade because that's a retail. That is a retail stock. They need to take them and Ralph Lauren and probably this one. I forget what this is. VFC, whatever. They need to book those into retail trade. Anyways, that's a little confusing. Oh, whoops. Wrong tab. There we go. All right. So Procter Gamble is like this is like the mega staple, man. This I don't know if this company will ever go out of business. I mean, they probably will eventually sometime. But man, Procter and Gamble, they know their business, man. They know it well. Dividends, they pay 94 cents the past 2 quarters at least. All right. So they had earnings mid October. They're gonna have earnings mid late January. Yeah, we're gonna have a good old time in January. Alphabet at the end, February 1st, actually. Microsoft, end of January. AAPL, towards the end of January. Tesla, towards the end of January. Yeah, January 24th. And Amazon, February 1st. A little bit more spread out there on big tech. It was like they were, I think, like the previous 2 quarters, they were all lumped up based on like 2 days. When's Intel? Intel, about, when was that, January 25th? Yep, January 25th. Intel making some highs today. See what they're looking like on the chart. Apple continuing, man, I'm telling you, man, just dump Apple. Jesus. Apple dropping. Not like it's hot. Microsoft Man, just still hanging that channel. Okay. Alphabet, just kind of hanging out. Nice little upper wick. False breakout again. 2 days ago, we kind of threw a wick up over this high that we had back in October. Didn't hold. Obviously, we know what happened there on Wednesday, towards the end of the day. Friday, kind of doing the same thing. Same thing a little bit. Okay. Meta. When is Meta earnings? Towards the end of January as well. Coming down a little bit today. And then Amazon, a little bit down. Nothing crazy. Tesla, gapped up. Traded lower. Been trading lower pretty good here over the past 45 minutes. All right. How's NVIDIA doing today? NVIDIA, gap up, trading lower. AMD, gap up, trading lower. AVGO, trading down. Intel, yeah, nice little upper move there today on Intel. So, okay. It's kind of the way some of the stocks look today. Let me know if there's any questions you got out there. What do y'all want to look at? Kind of get ready for kind of a long weekend, but also kind of a dead week. Not going to be a lot of data. Definitely want to keep. I wouldn't do anything drastic. Want to keep your eye on the ball. Just kind of see what's going on throughout the week. I wouldn't be doing anything drastic next week. But if we kind of trend bullish, I would want to know. I would be a little bit more cautious of that as we get into January. Amgen. Nice little bullish move there on Amgen today. People just came out and bought it up this morning. What was Synopsis? Was this Synopsis? Yep. SNPS. SNPS. Nice little drop there. Wow, they dropped pretty good there on the open. Okay. Consumer services. Airbnb. Let's take a look at this one. This thing's... Yeah, I saw this thing got hit the other day. Oh man, this is kind of tough spot here for Airbnb because it didn't even take out this high from September. I've also seen some things about California's like housing market is like it's dropped pretty significantly because you've had some homes have serious reduction in prices. I don't know if that is like an entire housing market collapse, but there was a few homes. All right, so I'm not gonna say like it's a complete collapse, but if you got to sell a house, man, you're gonna sell a house. You're gonna drop that price because I would rather get buyers and people would come bid a house up rather than me having to slowly drop the price to find the buyers. CarMax, KMX, let's check them out. Another discretionary retail. Ooh, CarMax gapped up and traded all the way down yesterday. It's kind of interesting that they did trade down that much. Okay, what else? What other kind of news we got here? Stocks edge higher, looking for eighth week of wins. Let's see. SPY weekly. Are we gonna get it? Most likely. Oh, we're gonna get 8 weeks of win because we're definitely gonna close above last week because we gapped up pretty good on Monday. So we'll get 8 weeks of wins. Yeah. Okay. So that's easy to figure out. New inflation reading could clinch Fed's dovish shift. Sure. Yeah, I don't really see a whole lot going on. Yeah, it was a quiet week as far as like data goes. So not a whole lot kind of going on. People are starting to like get out of the office, start to get on the road, travel, all that kind of stuff. So don't expect anything crazy today. I wouldn't expect anything crazy next week. But you know, if the market starts to continue just trend higher, I would be a little bit more cautious on that. Statistics kind of say if we're bullish. What's going on, man? What's going on, Ayush? Statistics kind of say that the year, you know, if we're bearish on that period between, you know, Christmas holiday, New Year's holiday, that we're usually pretty bullish the following year. So, I mean, if you're expecting to see a bullish year, you're probably hoping for like next week to be kind of weak. But if you're hoping for next week to be bearish, then you're hoping for next week to be pretty, you know, at least positive. Bro, you said I want to learn options. Where can I learn from? Um, I got you, man. I got you. Give me one quick second. I'm trying to. There we go. Here we go. Videos. So these are all the kind of options, different option strategies out there. So this is a playlist I definitely didn't make. I put this out there. Ah, that's where that video is. Let me change this real quick. I don't want that there. I want this. Trade ideas, market update. There we go. So basically, this playlist, I'm going to drop the link to you. What? Why is it getting really annoyed here with YouTube? But basically, we can go. Why is nothing there? Yeah, I'm gonna drop you the link. Give me a quick sec. I don't know. I don't know where all the videos just went. That's the thing. Give me a sec. Okay, there we go. So this is like the first video. What I'm gonna do is I'm gonna drop you this one, but it's an entire playlist, right?
Welcome back, Alpha Hunters.
Kind of go through it. You can just kind of go through the playlist. It kind of starts with like the more basic stuff. But you be able to find the playlist. I don't even know where you find the playlists. I don't know where you find the playlist. What the heck? It should be at the end. Let me see. Yeah. So here's the playlist. It'll be at the end right there. You bring that up,
Welcome back, Alpha.
and it just keep going. So that'll be there for you. There's about 19 videos. It kind of starts out basic, kind of just terminology, right? Some of the basic stuff, terminology, then kind of what calls and puts, chains are, the option chain is, option pricing, how options price. That's very important to understand. A lot of the different values that you'll hear about, intrinsic, extrinsic, out of the money, at the money, in the money, all that kind of stuff. So, and then I kind of get into different option strategies later on in the in that playlist. So, but yeah, if you ever have a question, man, don't always ask. Like, if you need some clarification, because if you're confused on something, I definitely don't mind adding another video to that playlist. Because if you have a question, other people got questions, and that's it. That's all. So yeah, if you got a question, man, just feel free to ask. Take your time with options, man. If you're not used to trading options, take your time learning. They're leveraged instruments, and it can take a little bit of time. Yeah, if you're currently a beginner, I tell people when trading is all about practice, and once you're profitable, then you just implement it. Okay, so practice, whether it's options or stock, it doesn't matter. You just practice, and you constantly refine your strategy. And then once you have a profitable strategy over a period of time, and it's kind of been proven, that's when you implement it, right? You can use back testing, you can use real life trading, but you want to just make sure that you practice, and once it's profitable, then you just implement it. Once it works, all that kind of stuff. You don't want to go into actually trading with a strategy you don't really know how it works, all that kind of stuff. All the different leverage, what happens on certain moves. So yeah, you want to kind of really want to know the ins and outs of whatever you're kind of getting into. But yeah, thank you for the question. It is a very good question. Definitely learn terminology. There's a lot of terminology in finance. Some of it makes sense, some of it doesn't. But it's definitely terminology that's going to get used and you're going to see. So you said currently I can say that the market will go up because we can see that there is the dragon candle at the bottom of the trend. Oh yeah, the high wave doji. The one that we put in about 10 minutes ago. Yeah. If you are really new at investing, are you new to investing or are you just new to options, Ayush? IWM. Everything got a little bit of that rollover action. New to options, okay. Yeah, I mean, just understand. Like, are you trying to be a trader? Or are you trying to make money? I love asking that question because it kind of makes people think about what they want. Apple. Is Apple bouncing? Apple's bouncing. Okay. Trading, man, it's all about risk management. Risk management. Just make sure you manage your risk. And that's the part where options. You're going in with leverage, so just make sure you know with options how much you are risking. That's the most important thing. Risk management. So just figure out and make sure you know what your risk is and how much you are risking with options. Okay? It's the most important thing. Now I'm gonna get out of here, but feel free to always come back here, Ayush, if you need to have questions. I do the live stream basically the same time every day. I'm not live streaming next week, holiday time, be with family and stuff like that. You come live every day. I do live every day. I'm just not going to next week. Just making that clear. Not going to next week, but I will. So I will basically see all you live streaming in 2024. Callie, you said, where are you from? I'm from Texas, Tejas, United States. Yes. From India. All right. Where are you from, Callie? Can you hold on? Can you put money in and get? Can you put money in and get an instant back out? Um, it, so that, all right. I'm trying to figure out what you're trying. Let me know what you're trying to get at. And I'm just gonna start rambling here. So if you're trying to get in and get out quickly, so that's called scalping. There is scalping type trading. Don't do that with options. Options pricing. The biggest thing that you're kind of talking about is that I'm trying to talk about is the bid ask spread. So if you look down here where my mouse is kind of highlighting down here, you see the blue number here and the red number that's called the bid ask number. And that's basically the bid ask spread. Options will have a wider bid ask spread than your stocks. Your stocks will have like a couple pennies. Options can have, depending on like what underlying instrument you're trading, like AAPL, SPY, Qs, they'll have pennies of bid ask spread. But you put 50 in, you close the trade, 55, and you get 55 in your bag. Yeah, I mean, you could do that. Yeah. You can definitely do that. But it depends on your timeline. You're saying like instantly get back out. You can get back out. I mean, that's like all like day trading, but it just kind of depends. Like if you're talking about putting 50 in, getting 55 back out, there are some ways that are pretty sure, reliable way to make money, but you might not be able to get back out right away. So I need to move to Texas. Germany's in that way. Germany's in the way. What time frame are you trading in? This is the 5 minute. I'm looking at a 5 minute chart here on the Qs. You can see right here in the background, kind of grayed out a little bit. The triple Qs, 5 minute time frame. I can go to a 15 minute, and you can see 15 minute there in the background. 15 minute. I can go to a 1 daily. There's a daily 1D. I can go to a weekly 1 week. 1 week. So if you don't see any letters after the number, I'm on an intraday time frame. So, never mind. There's an hourly. Lowercase h for hourlies. So you got 1 hour. Here's 2 hour, 120 minute, 2 hour. So, yeah, it's it's all about perspective. If you find a good timeline that you like to trade, and that's what's kind of tough about trading is very much kind of fitting in, what timeline, what time frame works best for you, and you kind of develop strategies around whatever timeline. Like any timeline will work, any time frame will work. It's just you need to know what time frame you're going to stick with, and then develop your strategies around whatever time frame you're going to trade in. On this, a moon is made in trend. Yeah, there's people always trying to moon stuff. Alrighty, I'm going to get out of here. Everybody have a great weekend. Take care around the world. Enjoy the holiday weekend. And the market will be open Tuesday through Friday next week, but I will not be on the live stream. Next time you'll hear from me will be Tuesday the 2nd, January the 2nd, 2024. So everybody have a great weekend, great holiday weekend, great long weekend, and have a great New Year's. Alrighty. Ayush, nice talking with you. Callie, nice talking with you as well. Bye-bye.